Good morning, everyone, and welcome to the European crossover webinar. And we did get past FOMC day, and we saw the dollar strengthen a bit in here. Our buy chart support had been that 97.28, but of course, with FOMC day, you can dip a little bit beyond, and we didn't dip too much far beyond. And we did see the euro come in. We talked about the significance of 1262. And 1193. Okay, so you can see those pretty much kept the market in check. We're seeing cable a little bit stronger here. Dollar CAD has recovered quite nicely after that dip here. And dollar yen, that actually came down right to our bias chart support to the pip. Right there, you see 1105. 1105 to the pip. We had a bias chart resistance here on cable at 30.94. Actually, if you look here in dollar yen, it actually went pip to pip. I mean, top to bottom to the pip to the pip. See that? Here's today's news. Things are a lot more clear now. I cleared out all these countries. I guess when they updated Reuters, it had a whole bunch of countries, and it's made it a lot clearer. But it had so many countries, it took me a little while to figure out how to get rid of all of them. So now we just have the ones that are pertinent. So we can see we've had German retail sales come in. Actual was down minus 0.2. Prior was revised up 0.5%. Eurozone market final PMI. What's final though? Prior was 47.8. 47.8. Reuters poll was actually 47.9. So the Reuters poll was 47.8 to hold it. Came in just a little bit lower here. We have UK market PMI at the bottom of the hour. Of course, we do have BOE today. You can see that here. Challenger layoffs, jobless claims, of course, labor costs and productivity. We do have a New York ISM, I should say, at 9:45 Eastern. Durable goods at 10 a.m. Eastern, and factory orders also. So let's go on and move on to the news. I did, because the news is super slight. I mean, the Forex story is like maybe a couple of paragraphs. So I include the Aussie because we did have a little bit of movement there too. Australia and New Zealand dollars are on edge as the rate decision draws near, and that's important. The Australian and New Zealand dollars crawled higher on Thursday, trying to recoup losses suffered after the U.S. Federal Reserve said a pullback in inflation was temporary and there was no need to lower interest rates. The Aussie dollar nudged up to 70.21, having slipped 0.5% overnight to as low as 70.07. The Kiwi was holding on at 66.30 after losing 0.8% overnight to a trough at 66.17. The Fed's steady outlook stood in stark contrast to the situation in Australia and New Zealand, where investors are wagering that rates will be cut, perhaps as soon as next week. The RBA holds a policy meeting on May 7th and is under pressure to ease given disappointed inflation and persistent falls in house prices. Futures markets implied a 1 in 3 chance of a cut in the 1.5% cash rate, while a Reuters poll of analysts found a sizable monthly tip tipping a reduction, though most, I think, the RBA will wait a while. If they do go, there's a strong prospect there will be at least one more cut in fairly short order, and chances are we will see the odd head toward the lower edge at 68 to 73 range, said Ray Trill. If there's no move in May, on May 7th, we should see at least a temporary bounce in all things. It's odd as markets pushing rate cuts timing into the second half of the year. Much the same way goes for the Kiwi and the Reserve Bank of New Zealand, which has a policy meeting on May 8th. The market implies a little bit more than an even chance the central bank will cut its rate 25 basis points to 1.5%, largely in response to weak inflation and sluggish wage growth. The call is complicated by the fact that this will be the first meeting under the new policy committee, which includes 3 external members, adding extra uncertainty to the mix. There's no great urgent economic crisis needs to be addressed at the main meeting, noted Sean King at Triple T Consulting. The new committee members may wish to take a little bit more time to get themselves familiar with reports, the process, and the analysis before voting to lower rates. I would think so too. I would agree. At this stage, our expectation remains that the RBNZ will leave the cash rate on hold, but the decision is likely to be a close-run thing. Investors will assume an easing is only a matter of time, and 2-year yields remain far below the 1.75% cash rate at 1.435. Likewise, the Aussie 3-year yields of 1.29% are well short of the cash rate. Once again, a story to keep in your back pocket. And let's go to the morning bid first. Morning bid. Despite a UK economy that by usual benchmarks is relatively healthy, the Bank of England is again expected to shy away from even a small rate hike today because of the cloud of uncertainty surrounding Brexit and Theresa May's shaky government. Bank of England watchers will instead focus on hints that the bank's policymakers will make any move at all before the Brexit saga is resolved. Its updated forecasts are likely to show inflation will soon overshoot its 2% target, a possible signal that a rate rise may come sooner than investors think. Let's see. And on to markets. The Fed's not budging. For all political pressures to ease policy and the mixed signals on growth and inflation, the U.S. Central Bank refused to signal other than it was still on pause. That bolstered the dollar and colored over excited world equity and rate markets, which had started to price in a rate cut by the end of the year. The Fed did reduce by 5 basis points the interest it pays on banks' excess reserves, as expected, a technical move to ease money market tightness as it runs down its balance sheet. But Chairman Jerome Powell was unwavering in the policy rate outlook and said the recent relapse in inflation rates was probably temporary. The S&P fell from record highs and closed down 0.75%, I should say. 10-year yields nudged above 2.52, and the dollar ticked up against again in the euro, while the latter closing the 112 handle, losing the 112 handle after the decision and skulking below the first thing Thursday. The overnight reaction was muted with holidays in both Japan and China, although Hong Kong and South Korea benchmarks did rise. The all-country index, however, slipped lower in the second day, and European stock futures were marked lower. A first quarter earnings stream in the overall remains relatively upbeat, and U.S. ADP private sector jobs for last month came in higher than forecast, with eyes on the national payrolls number tomorrow. Noises from the latest U.S.-China trade talks in Beijing continue to indicate a deal is imminent, with CNBC reporting both sides could announce a trade deal by May the 10th. As Chinese Vice Premier Liu heads to the Washington. Manufacturer surveys for April from across Asia overnight were mixed bag after disappointment from Chinese PMs earlier this week. The big piece of the day in Europe is the BOE's meeting and inflation report. The BOE is the only central bank left of the G10 to still formally have a tightening bias, even though futures net markets have already pushed the chances of a rate well into next year. UK economic numbers still defy some of the worst forecasts, but the extension of the Brexit uncertainty as far as October, when BOE marked governor is due to leave the bank, and benign global inflation may lead the central bank to ease up on its guidance. The pound, which has been supported this week by signs of some movement in Brexit compromise talks between the ruling Conservative Party and the main opposition Labour Party, held above 130 first thing Thursday. And lastly, the dollar recovers after the overnight stumble in the BOE eyed The dollar recovered on Thursday after suffering some brief losses overnight, with traders focusing on relatively confident comments from Fed Chair Jerome Powell on the economy's outlook. The greenback took a beating after the surprisingly sharp retreat in the ISM index of manufacturing to 52.8 and downgrades of U.S. inflation outlook, prompted investors to sell the U.S. currency and push yields lower. But that changed when Jerome Powell said the factors dragging on inflation might be transitory, and he saw no case for a rate move in either direction. As a result, the dollar was 0.5% above overnight lows against a basket of its rivals. Powell is seeing the glass half full, said Konstantinos Anthis. What's more important is that he made it clear that he sees no case for easing interest rates, and which of course will not make President Trump happy at all. Still, interest rate futures are pricing a 64% chance of probability of a rate cut by the end of the year. Euro was back at 11.98, but we saw this early above 112. Sterling was broadly steady after hitting a 2-week high on Wednesday on speculation that the Brexit talks between British government and main party opposition parties were making some progress. Okay, so let's go and move into the analysis. So yeah, I mean, this all played out pretty much in play. It was just technical. You know, we talked 1262, 1193. I don't see any reason to change this 1183. You see right there? No need to change that at all. And then on the upside, I mean, we're probably going to be, I don't want to say trapped, but I think we'll be limited because then we have NFP, and the thought will be that it'll come in stronger. So we could even push a little bit lower. But for right now, we'll say 1183 because that would work kind of like as a trigger. You lose 1183, then it's going to push us much slower. And we're not looking, like I said, in this case today, the bias chart, we're looking, at least for the euro, 1183 is support. Anything beyond that will trigger this market to move lower. So the market would initially defend that number. On the upside, let's take a look here. We'll go right there with 1228 on the upside. Moving on to cable. we've had that 3094, and that's going to essentially work as a trigger. Obviously, just like yesterday, bank. Today we had BOE. If we were to rip up there, it'd be 3153. Our bias chart resistance 3094 has kept the market pretty much in check, but that's going to work same thing like a trigger. If we were to pop, you hit all kinds of stops, and we'll look up here at about 3141 initially. We'll go with 3125 in case you want to. I mean, this is still key here, this 3094, and they don't expect them to be. We'll have to see how this play. Well, let's go with 3124. We do want to go in and mark that off just in case. I think this 3094 is held very well, but we'll go with 3124 in case they pop up, take some stops, and then they would come back in. So it'll be 3124. You can see this coming right across here. Not looking for this. I like this area here, but in case they try and push the stops, I'm not sure what we do. I mean, maybe if there was some dissension or something, but I just don't really see it. But just to, where could it go, or where would they have some initial? Let's just go with 3124. With support down here at 3008. 3008. Well, no respite here in the Aussie. They have that. They keep saying that eminent news, and people keep falling for it. I mean, eventually they'll get there, but Aussie's just not willing to buy it. It's kind of ticked up a little bit higher here. Support's going to be right there at that 70.10. With resistance here at 70.67. We'll mark our support right there, 66. We'll call it 66.13. Resistance there is 66.81. We'll call it 66.82. Boy, this New Zealand yen isn't doing much of anything. On the short haul, it's going to be right there, 73.68. 73.68. With there. Resistance comes in right there at 74.40. And let's go move into the dollar CAD. This market has been all over the place for quite a while. I mean, it moves down, then quickly pops right back up, and then gets knocked down. That 33.82 held well. I had 33.68. We thought we'd dip a little bit further. It didn't. Right there, I thought we'd make it down to 33.68. Resistance comes in right there, 34.74. We'll move just a hair out right there, 34.80, 34.80. Support is right there at 34.15, especially ahead of NFP. Now let's move into the peso. This has been really tricky. Resistance remains right here, 1902, 1902.22, and support will go right there with that one. I think we already had that, 1888.7. This one is just hard to make heads or tails of this one, to be quite honest with you. Personally, I would just leave it alone for a while. It's just all over the place. I mean, once you get going and a couple people got fooled yesterday thinking, okay, now it's going lower. And then it turns around, goes, shoots up higher, and then comes up a little bit short. And it's like, we're just all over the place on this thing. So it's a tricky one. I certainly I wouldn't be doing anything with it right now. There's just no rhyme. I wouldn't say no rhyme or reason. There's just no follow through. And about the time you think it's going to break low, it turns around and flips back up, and then it quickly runs out of gas. So moving into the dollar yen, at least bias chart wise, this one we had this one pegged pretty well. It tagged the bias chart bottom and the bias chart top both in the same day. So 1105 and 1166. The only thing that'll keep this a little bit on the bid is tomorrow's NFP. So maybe they can push it just a little bit higher to 1170, which is going to move it just a little bit higher to there. Support for now. We'll move that up a little bit higher. It's going to be 1129. Aussie's pushing up a little bit higher here. Look at the euro popping up too. So let's go into the dollar index. This played out relatively well. Yesterday. Nice little hammer. We got a little bit extended, and then everybody started to get all bearish on the dollar. Not that I've been an ardent bull in any way, in any respect whatsoever, but once again, we've talked about this with the most bulls since 2016. These people aren't going to go away unless you knock them out, like out of the ring. And in order to knock them out of the ring, you're going to have to get a daily close below, and I'm not saying completely, but I mean, you'd have to get a close below 96.81 for people to say, whoa, I think we might have a top in place, at least a temporary top. And we didn't even get close to it. And tomorrow's NFP, and that's probably going to come in strong, so that could give them a little bit of a boost. Uh, For today, resistance will be 97.80 and support, which is the same as from yesterday, and the support is going to be 97.37. Well, gold wasn't too keen about the whole steady as she goes. I'm not sure why anyone would have thought that the Fed would have be suggesting some kind of a rate cut. I didn't get that part. But we're back to the pivot, and if we come back to the pivot, chances are that's 1267. We'll want to test that pivot. Not for today, but going into tomorrow. Oh, there's an opportunity for 1258. I don't want to put. There would be the opportunity for 1258 if the dollar strengthens, but I want to go on and well, I guess we're just gonna have to say 1267, the pivot for right now. 1267. I haven't traded gold in a while, quite a long time. Resistance is gonna come in right there at 1276, right there. And let's go moving to the cross rates. This thing has really dipped. We did have support at 35.77. We dipped even a little bit lower here. Um, that was good little support right there. Coming across. But we'll go with the 61% that eventually they could get there. I think today, just below here is actually not bad here, right there. 85.70. But we'll go with the thought that they could eventually get down here if the euro weakens. So let's go with 85.60. Some decent volume there. Let's move just a bit higher right there, which would be 86.18. And looking at the euro yen, we'll stay with this right here, which is 25.45. We did come in actually our finding support here at this support here. We're going to stay with this. I mean, obviously it dipped lower, but now they've come back to test it and it's holding there. So 24.81, that's going to remain all the same right here. And this has really changed here. Did have a little bit of a resistance here at 59. I remember pointing this out here in the chat room. There's 59.79. We got just above it, and then we pulled back. Not a whole lot, but we did. We'll stay with this. I'm not stay with this, but I pointed that out as we went beyond, which was our buy chart resistance. So we'll go with 59.79. I remember mentioning that that's a good volume area in the chat room. So when it was touching it. You have to mark this for bullish for now. Support will be right there. I can go right there. 59.20. Resistance is going to be right there at 69.18. 69.18. Actually, 69.20. 69.20. Actually, this has been bullish. With support coming in right there at 68. $68.04. $68.04. And let's go with the ASEAN. We're trying to hold this area here. We'll just move this just a hair lower here. Right there. 78.25. Actually, hold on. Yeah, there we go. So 78.25. With resistance coming in, certainly we haven't seen the kind of movement that most thought we would have seen. Keeping it pretty tight. 78.62. it'll work basically like a trigger if we get past that. And starting versus again. We're going to keep this here, 45.98. With support coming in at, I'm going to keep this one here too, 45.19. And let's go into the sterling versus the odd. Pretty good resistance area here. It's going to be this 86.12. A pretty good rebound here too. Take a look at it on a daily. Good solid resistance here. Support for right now is 85.25. And then on to CAD yen. Support right now is going to be 82.62. Seeing this, boy, what was just building up in here. Resistance now goes and drops down in here. 83.21. And there's your bias chart. I'll go and get that posted into the room. And thanks for joining us here on the European Crossover webinar.